Hello all, welcome once again. This video is very important from the point of view of selecting the correct option to sell. We'll look into very useful tips to select the correct options. But before we start, let us take a famous quote from one unknown author. Look at market fluctuations as your friend rather than your enemy. Profit from folly rather than participate in it. Let us directly jump into the useful tips for picking the right options to sell. In this video, we'll look into details of the following tips. Tip number one, use option open interest as a clue to market direction. Tip 2, strike a balance between premium and risk. Tip 3, sell low delta. So let's move to tip 1, that is use option open interest as a clue to the market direction. First, understand what open interest is. Open interest is the total quantity of outstanding derivative contracts such as options or futures that have not been settled for an underlying. The total open interest does not count and the total every buy and sell the contract. Instead, open interest give a more precise illustration of the options transaction movement and whether wealth stream into the future and option market are growing or declining. Using open interest to gauge public sentiment can be extremely valuable to option seller. Begin by looking at open interest in both puts and calls of each market. If there is a discrepancy between the number of open contract in puts versus calls or vice versa, there is a good chance that public is favoring one side of the market. A good rule of thumb, if given the choice, is to fade the public. For instance, if the open interest in put is specific underlying is 50% greater than the open interest in calls and most of the trader holding long options are small speculator, then that is a good indicator that public favors the short side of the market. All other factors being equal, you may want to consider selling puts in this situation. The reverse would be true if open interest in calls was decidedly greater than puts. You can download open interest from the NSE website. For a quick reference, the open interest chart of Tata Steel 350 350 strike price call is analyzed and you can check out open interest building continuously. That clearly indicates that during October Tata Steel will go up. With this analysis, you can very well sell put options of 300 strike price October expiry at 24 rupees premium. You would have collected 40,800 rupees on a margin of approximately 2 lakhs rupees. As of 14 October, it was quoting at 7 rupees and 10 paisa. You would have closed the position and put around 28,000 in your pocket. A decent 14.3% return in 18 days. Another important aspect to pick the correct option is put call ratio. Let us devote some time to understand the PCR, put call ratio. As we discussed in previous video, a put option gets the trader the right to sell an asset at a predefined price. A call option is the right to buy an asset at a predefined point. If traders are purchasing additional puts than call, it indicates an upsurge in the bearish outlook. If they are purchasing more calls than put, look at for a bull market ahead. A put call ratio of 1 signals that the total of buyers of call is the same as total of buyers of puts. Nevertheless, a ratio of 1 is not a precise beginning point to gauge outlook in the market for the reason that there are generally more investor purchasing call than the purchasing puts. So a typical put call ratio of 0.7 for equities is reflected a decent starting point for assessing the outlook. In general, a rising put call ratio or ratio more than 0.7 or higher than 1 indicates that equity traders are purchasing more puts than call. It implies that the bearish outlook is developing in the market. Securities are either considering that the market will move low down or are protecting their wallets in case there is a sell-off. A falling put call ratio or below 0.7 and close to 0.5 is deemed as a bullish signal. It means additional calls are being purchased as opposed to put. One way to calculate PCR is dividing the number of open interest in a put contract by the number of open interest in the call option at the same strike price and same expiry date on any given day. It can also be calculated by dividing put trading volume by call trading volume on a given day. There are online sites that gives ready PCR ratio, for example indiainfoline.com. You can also search it out on moneycontrol.com. PCR for Tata is still on 22nd October for 340 strike put was 0.81, means there are almost more people selling this specific contract and indicates a bearish trend for Tata Steel. Let's look into tip number 2. Strike a balance between premium and risk. A commonly asked issue by many beginner option sellers is what sort of premiums they should pursue when selling puts or calls. This is often a matter of individual preferences. A simple rule is more risk, more reward. If you sell close to the money option, you can collect a higher premium and enjoy high returns. However, risk will also be equally high. So it is an individual choice, but we recommend selling deep out of the money options. Let's look into tip number 3. Sell low delta. It is our advice that you seek options with a low to very low deltas when you are selling. They will have the smallest probability of ever going in the money. Selling calls into the spike release. Market making new highs may not be the most desirable time to sell call option. Then again, in the right circumstances, they can be optimum market for selling calls. Market in fall off often can be a clearer and or safer chances in which to sell calls. Once again, we emphasize the benefit of understanding the fundamentals in supplement to the technical signs that you may be witnessing on a chart. A bearish technical trader who experiences sudden rally in the market may see a danger and be frightened out of his position. A bearish broker who understands the fundamentals and encounters a quick rally in price sees a prospect. However, if you are somewhat familiar with your fundamentals and have done basic historical price studies, you probably can tell the strikes that are more at risk and the strikes that are downright ridiculous. Thank you once again, and we'll look into different strategies from our next video onwards. We'll close this video with one more insightful quote. If you make meaning, you'll make money. Thank you very much and happy learning.